Go. Hi, everyone. I'm here with James Stein in Chicago. James, how you doing?
Hey, good, Theo. How you doing, man?
Where do we find you today? In the home office, that same place I am?
I am in the home office where I've been for a while now.
Nice. Well, thanks for your time. Looking forward to discussing the Chicago office market from a tenant's perspective. It sounds like 2019 was a great year for the market. Can you describe a little bit about and talk a little bit about the market?
Yeah. So in 2019, I think by almost any metric was probably the best year that Chicago's seen in probably a decade. We had over 10 million square feet of leasing done in the CBD. Just a great market. I think we saw a lot of new buildings come online. We saw a lot of tenants expand, a lot of organic growth in the market. So a strong year all around in 2019.
Regarding the new buildings coming up, were those spec built and then leased, or were they pre-leased or a mix?
Yeah, I mean, there was a lot of pre-leasing done. You know, most of the leasing, about 60% probably of the leasing last year was for Class A product, right? So there was definitely a shift to quality, flight to quality, whatever you want to call it. And a lot of the new buildings benefited from that quite a bit.
Yeah. So how does today's market, albeit everything's closed or mostly closed, how does it feel compared to last year regarding kind of velocity, which may be hopefully a stalled indicator, and hopefully we'll catch up. But go ahead.
Yeah. I mean, night and day. I mean, it is a market right now where tenants who have lease expirations are in many cases just doing short-term extensions to buy themselves some time to come up with a longer-term strategy. We are seeing occasionally, a longer-term lease get signed, but I would say that that's the exception rather than the rule. We're seeing decisions that can be put off to later being put off. That being said, if you are a tenant for some reason that does know what you want and does know what your path forward looks like from a real estate standpoint, certainly a good time to be in the market, tenant favored to say the least.
Regarding sublease space in the market, how does 2019 look? I'm sorry, how does 2020 look compared to last year, and has the inventory?
It's gone up dramatically. So our Chicago research team just put out a report this week that showed that we were up about 56% on sublease space year over year from where we are right now.
Wow.
So a lot more on the market, obviously. Now, some of that space came on prior to COVID hitting, but certainly there's been a lot added over the last, 4 to 6 weeks, and certainly I think most people's expectations are that will continue. The supply will continue to increase.
What's the tenant mix that's offloading or trying to dispose of their space?
Yeah, well, Chicago's a pretty diverse tenant base. So we have financial services, law firms, tech. We have a little bit of everything here. But I think most of the subleases that I've seen that my clients are looking at as possible opportunities are from the tech sector. So there's Uber, there's Flexport, there's Glassdoor, there's Groupon. There's these large, nicely built out spaces that in some cases were just leased not more than 12 months ago, that are now on the market. So a lot of open floor plan space. We'll see how tenants react to that. But that's a lot of the new supply that's come on the market for sure.
Are a lot of those spaces big blocks, or are they marketing them into potentially smaller blocks?
Yeah.
Obviously, the more that you can change the space, the more tenants there are. So can you describe kind of the blocks of space, I guess, that are available?
Yeah, no, so what I would say about the subleases just in general, right? I think some of them came on the market, and just from a rental rate standpoint and a size standpoint, and really we're trying to hit a certain number. We're trying to hit, we want to sublease this entire space. As more and more space has been added, and no indication of it slowing down, I think a lot of these tenants who are trying to get rid of space are becoming more flexible. So there's some spaces who started out we're asking this dollar amount, right? And now they're saying, hey, just make us an offer, right? And so the same thing for the size of the space. Obviously, it has to be able to be divided up in a way that makes sense. But I think you're just seeing more flexibility from some of these tenants trying to get rid of space because they're seeing the same thing we are. There's not going to be less space, put on the market, right? It's going to be more space. And so you have to get more flexible to get rid of your space, basically.
Right. Are most of the subleases kind of plug and play, which is kind of furnished and ready to go?
Yeah. So a lot of the spaces have furniture. They're basically ready to go. I think the tricky part about it is, do you want, as a new tenant coming in, do you want to use that space the way this old tenant had built it out, right? And so a lot of the spaces are pretty dense. As you know, working with tech companies, it can be a pretty dense layout. And so does that fit with what people are trying to do with their space now, right? We're always talking about trends and which way things are going, but I think we can all agree that more space per employee is probably the way a lot of companies are going to go. And so that's the question about the existing space is, how can you retrofit it, or how can you redo it, especially from a furniture standpoint, to fit what makes sense for tenants now that didn't make sense when the space was built out, even in January and February.
Sure. Are there any new projects, developments, micro markets that were previously kind of fully leased without any opportunities that now have space that wasn't available maybe last year?
Yeah, I mean, it's a great question for us here specifically, because there's a market, Fulton market, which has gotten a lot of press, and I know we've talked about before. A great submarket here, great restaurants, great bars, and it didn't have any existing space 12 months ago. I mean, 18 months ago, if you wanted to go and find an existing conditioned space in Fulton market, good luck, right? Now there's a lot of subleases on the sublease market. I think from last quarter to this quarter, it's up 40, 50% or something, but I don't even think that tells the full story. I mean, there are great spaces that you can go lease in Fulton market right now that are existing, built out. You don't have to spend the money, obviously, to build out the space. That just wasn't the case. That's a new thing. That's a new thing in the last, few months here.
So it's hard to peg sublease space and compare it to direct space because of the variety of deal factors. But what on average, or maybe pick a example, compared to Class A compared to the 2019 market, say in Fulton market, compared to the opportunities that are available today, what's the rough price differential difference?
Yeah, I would say from a cost standpoint, it depends obviously, but maybe as much as 20% from a rental rate standpoint. But I think the real benefit you have is the dollars that you don't have to spend. I mean, construction here in Chicago is expensive, and landlords have been giving very, the significant TI packages, but it's still not close to enough to build and furnish a brand new space in Fulton market. So the biggest advantage, I think, with some of these subleases is companies can come in and their out-of-pocket expenses are going to be a lot less than looking at those raw spaces, which are it's just really hard to build and furnish a raw space in Fulton market without coming out of pocket. So that's, to me, I think the biggest advantage of some of these subleases.
So it sounds like there's a lot of opportunities, which leads me to my last question. What are some kind of, where do the opportunities lie? Obviously, we've talked about sublease spaces that that weren't on the market a year ago. Obviously, sublease spaces are a great opportunity for a lot of tenants. They might not fit every tenant's aesthetic and build out layout that they desire. So kind of holistically speaking, kind of where are the opportunities these days in Chicago? Yeah.
Well, I know my landlord colleagues probably aren't going to love me saying this, but I think the opportunities are on a sublease basis, like we just talked about, but also obviously on a direct basis now. The landlords themselves are now looking around and saying, well, we have to compete with these subleases that are offering spaces at a lower rental rate that are fully built out and furnished. So now our deals need to get more aggressive, right? Obviously, there's not a lot of tenants that have a clear path forward in terms of exactly what their real estate strategy looks like.
That's the thing. That's the thing. There could be the best opportunity in the world, but if you don't have a clear path, then it might not make sense. But you know, there could be some. I think landlords that previously needed to do a 7 or 10 year deal may still do the deal with 2019 concessions to get the occupancy. You know, I think that's something that we haven't really seen yet because we're still kind of brand new into this cycle, but it'll be interesting to see how much more flexible landlords are this year.
Yeah, I agree with you. I think that that's the biggest key. I think landlords have to be flexible and have to understand that what tenants are looking for is just going to change. And a lot of it is still up in the air, obviously. And so having some time to come up with, you know, what your strategy is critical. And that's why we are seeing landlords here, obviously, being more flexible with, you know, 1 year, 2 year extensions to buy that time. And if you happen to be one of those rare tenants, in my opinion, that are crystal clear on what that path forward looks like, there are some great opportunities. It's just, you know, you have to know what the future holds. And I think that that's a tough thing to do right now. So
yeah, agreed 100%. Cool. Well, let's touch base, and it's hard to believe it was just 4th of July.
I know,
but let's touch base again, you know, around Labor Day, and hopefully things have changed for the positive for everyone. Thanks for your time.
Thanks. See you, Theo. Bye.
Take care.